Hello, this is Brian Shannon from AlphaTrends.net. It is the 22nd of February 2008, and the market's closed for the week, and we had another volatile session here. The spiders finished up 95 cents or 0.71%, and I wouldn't have expected to say that an hour ago. It was looking like we were headed for a pretty weak close here to the week. But what I pointed out on my blog this morning, and I think the most important thing that I wrote on there, fortunately, this morning was. The market's in a downtrend. Here where I was taking a look at the IWM, which broke this trend line we've been looking at, so I drew a little happy face in there. But more importantly, below that was don't forget stops. Complacency is the enemy. And I got a couple emails later in the day from people saying, hey, my profits got robbed from me and that sort of thing. But you've got to, the bear markets are very volatile. There's a lot more volatility in a bear market, even on the shorter term time frames, than there is in a corresponding bull market. So you have to be an aggressive trader. You can't just look at these triangle patterns and expect that they're going to meet their measurement. Like I said yesterday, you can't blindly follow a pattern, especially when it's so obvious. And maybe Joe Granville was right that what's obvious is obviously wrong. You always have to be prepared for what if. There's no perfect pattern. There's no perfect indicator. Defense wins the game. I don't know how many times I've said that over the last few years, but truly you have to think defensively, because when you have a market like this, it just looks terrible all day long, staying below that declining VWAP, and then it comes up to it, fails once again. As soon as it starts rallying real strong like this, I didn't have the television on. I didn't know what was happening, but I covered my last short at 15:30 right here as it got to the daily VWAP. I had no clue what was going on, and I really wasn't interested. All I knew was that there was some big buying force coming into the market with the biggest volume of the day as well. And when you see that happening, you've got to take action. You can't just sit there and say, is this being manipulated or whatever. Possibly it's being manipulated. And I just used that word because I saw a email come into my email box, and Michael will know who it is, but it says manipulation question mark. Is it manipulated? There's you can go a lot of places with conspiracy theories in the market. Our job's not to question why, but to respond to what we see on the price action and take the appropriate action. You can't get locked into a belief. If you did think there was manipulation in the market, one suspect group would be the so-called plunge protection team, the Federal Markets Working Group, or whatever they call it. And since the Federal Reserve began cutting interest rates aggressively with a 3/4 point cut right here, and then the 50 basis point right here, the average price, that's this line right here, the volume weighted average price. It looked like the market was going to go below there, and if I was, a big government agency manipulating the market, I would think that, hey, now's the time we got to go in and rescue this market. Let's time this news on a Friday afternoon. It looks like we've got a lot of people trapped short underneath this obvious symmetrical triangle. If we get them to buy back, then we could really push this thing up before the weekend. You could go on and on and on. The point is, though, when the market breaks an important level of support and then rallies back above it, there's a large group of participants that are now losing. There's fresh money. The validity of support and resistance is, the fresher that a break occurs, the more people that are trapped under here. So you get from these failed moves, you get these very fast moves. And again, the job is not to question why it's happening, but to respond to price action. Try not to overthink the markets. If you're going to be a trader, you've got to respond to the only thing that pays, and the only thing that pays is price. And that's the only thing that hurts you too, other than maybe just having your money tied up in terms of the risk of time goes. So the symmetrical triangle we've been looking at, it still looks valid. We're still in a primary downtrend, but there are some encouraging signs overall. That is, we've got that 10-day moving average crossing back up through the 20-day moving average again right here. It's a more neutral overall environment than anything. That's the way you've got to look at it. And when we're in this neutral to downtrending, actually it's more, when I say neutral, I'm saying over the last couple weeks is the way you've really got to look at it. But overall, we're still in a downtrend. Perhaps the market is finding a bottom in here, and the bottom is a process. It's not an event. It's not because the Federal Reserve cuts one day or says something another day, or the PPI or CPI does something. That's not how bottoms are formed. They're formed over time, and there's a lot of emotion in the markets during that process, and perhaps that battle's being fought. If that's the case, well, you've always got to be aware, like I say, of what are the potential scenarios that could turn this market. Maybe breaking past the upper level of this downtrend line. I think that, again, that 137.20 area that we saw resistance at this week, that's going to be an important level going forward next week, and perhaps that'll lead to a rally up towards this high and a test of the 50-day moving average, which is still declining. So it remains a very volatile environment. I've been saying for months now that the only people that really ought to be involved in this market are aggressive traders. Bear markets are volatile and they're very difficult. They are more difficult to make money in than a bull market, and you have to be much quicker to take action. So I'll quit harping on that. But the bottom line is, we've got a lot of volatility. We've got these markets maybe searching for some support. You can see that the semiconductors still within this triangle. Nothing's changed in there. It hadn't broken this trend line that we've been looking at in here, and it also failed to make a lower low in here. So the Russell 2000, this is that trend line that I had pointed out on my blog earlier today. As it had broken, and that's where I put that smiley face on there. The stock was 60. The market was 68.31, so it was, or 69.31. It was still right here. There was still plenty of decline left at that point, but when you look at that was about 69.31. That was right in here where it still broke, and there was still room to the downside. But when this market really took off and made this higher high here late in the day with volume, it said that something bigger was happening. And I don't want to sit there and swear at my computer and call the market stupid. The market doesn't bend to my beliefs. That's what I've learned over the years, and you've got to truly suspend what you believe and trade what you observe. When it took out this resistance, intraday 1 minute resistance, it ran right up to the 2-day volume weighted moving average. Now, if you look at the average price this market's traded since the Federal Reserve began their more aggressive interest rate cutting campaign, the average price, we're still below it. We're right at it. This market still is in a primary downtrend, but it was impressive to see that the buyers came in and had something left today. I think it was more short covering than anything, because a lot of people got short on this breakdown, and you've got to be quick or you're going to be dead in this type of market environment. The TWM I've been talking about, how it needed to clear this resistance to get a good long side trade, to get exposure to the short side in the Russell 2000. But you've got to look at the definition of trend intraday. When you're looking at it, and then it starts to go sideways in here, when you see that that this level of support just above 85. I'd suggested to another email reader today, 84.85 was where I was thinking that a good stop level should go. That was basically below this low right here. And that's when this market really took lower. It crashed down through that daily VWAP. And the Russell 2000 now, on a weekly time frame, nothing's changed. We're still in a terrible downtrend. It still looks like we ought to see a test of these lows, but for now that got delayed because of some fundamental catalyst that spooked a lot of people, and we got a very sharp move here at the end of the day. And now we've got to let the market settle in, digest that news early next week, and then see what the trend is going to eventually be in here. Wait for time to reveal exactly what this market has in store, because again, it's got to be traded aggressively from the short side right now, and we're at a potential level where this trend line, which had been acting as support, may act as resistance. We've also got a declining 5-day moving average, and the market came right up to that 2-day daily VWAP. So a lot of confusion in this market still. Overall, we're in a downtrend, but buying and holding for short exposure is to me, a very nerve-wracking way to make money in the market. I think you've got to be aggressively trading, and I've said that probably 10 times in this video, so I won't say it again. The NASDAQ 100 continues to coil within this range. What we saw was that, if we look at the 30-minute time frame, let me just get rid of a little bit of data so we can see the more recent data a little bit more clearly. From the lows, from the low end of this trend line, you can see it came right down to that trend line. I've also been pointing to this one as well, and that's where we had some breakdown here this morning. We do have this market came to that trend line as well, also to the declining 5-day moving average. So it's back towards this 40, back above 43.50, and more reasons just to think that overall we're we're more neutral. We're in a trading range, and it's tough to say which way this market's going to go eventually, but clearly, again, the path of least resistance is lower. You want to give the benefit of the doubt to the bearish side. However, when you see these rallies materialize, you got to be quick to take your profits, and it's a trader's environment when we're in a bear market.